Hello everyone, welcome to Elliott Wave YouTube channel. This is Henry and today's Friday, November 13. The time is around 4 a.m. GMT. Today we'll be looking at the chart of the Dow Futures 60 minutes chart. We can see the index ended with 4 right here. Okay, this is if you take a look here in our site, um, that will be the primary degree, right? That will be in the primary degree here, this wave 4, and we are now within the wave 5 to the upside, and the wave 5, the subdivision should be um, in 5 waves, right? So you see wave 1 in the intermediate degree. This is wave 1 of 5 ended here. We are currently in the wave 2 pullback as a zigzag ABC, and over here is when you see the C leg of the zigzag equal to the A. Typically that's when a zigzag corrective structure ends, and from this area here we could potentially end the wave 2 and then start seeing support, and then from here we can go to new high in the wave 3, right? As an alternate, of course, we can also get into a double zigzag. A double zigzag basically just means that this zigzag here will be ending a W. So still a zigzag ABC, but it's ending W, and then instead of going to new high, you will see a bounce in the wave X, and then you will have another 3 pullback, another zigzag, another ABC here, before finishing the WXY here, which is the bigger 3 swing, before turning higher, right? So of course, a double correct the double zigzag, we are calling it a double correction. We cannot know for sure ahead of time whether it's only going to be doing a zigzag or a double zigzag, for example. But we do know as long as this pivot to 5946, which is basically the fear right now, as long as this level stays intact, is holding, then we like more upside in the Dow. Okay, so now if we move back and look at the larger degree, if I look at the daily chart now, let's take a look here, and just remember the position of the 4 here, right? In the primary degree, if we look at the daily chart, this is where the 4 is. So that means this is your 3, and we are talking then about the entire rally that started from March 20th, right? So as you recall, March low is a significant low across the board in the market. That's when we bottom after the initial fear sell-off because of the COVID-19. Since then we have continued to rally, and you can see it continue to make new high. Now in fact the Dow just makes a new all-time high, right? This is the pre-COVID-19 at 29,538 before that big sell-off, right? This is 29,543, and here on the 9th of November we got 30,000. So we do get a break to new all-time high in the Dow Futures, right? Dow Jones. So again, we are liking more upside now. Again, this was 4, right? Against this with 4, we like more upside. So any pullback now should continue to support. Again, this is we're calling this ending 105. Now the alternate, of course, we could be ending the entire wave 5 here, right? Now instead of ending just with 105 like what we are proposing with 105, we could be ending the entire wave 5. So that will be the alternate. Now if we are ending the entire wave 5, what that means is, that means we should be correcting this entire cycle from March instead of just correcting in the wave 2 here, right? Instead of just creating in the just correcting in the wave 2 like this, then we could be already talking about correction of the entire 5 ways up. So we could be doing a little bit bigger pullback as an ABC like this, right? Correcting to correct this 5 ways up, before higher again. So that will be another possibility, another alternate. However, so if we are taking this route, the bigger pullback, then this can possibly become a 5 ways down. So for example, this could be 1, 2, and then become 3, 4, 5, right? It can become a 5 waves, which ended with A here, right? So this could be ending with 5 in black, and this could be 5 ways down, ending A. So before you got a B and another leg lower C. So that will be the alternate path. All right. Now, if we take a look at another index, the Euro stocks. Okay, so this is the Euro stocks chart. This is an index that is primarily consists of the companies in Germany and France. You can see it also rallies just like the Dow and everybody else. Now, but you notice here in the case of the Euro stocks, we also broke above this previous peak in July. And you can see if you are trying to look at the sequence, this entire move from March looks to be ending here. Unlike the Dow you can still make an argument that this is still part of the same cycle, right? This is still part of the same cycle, but in the case of the Dow, this is actually clear. This cannot be some sort of wave 4 from here, right? It's too big to be a wave 4. So then you make a new high here. So that means we got a higher high here, right? We got a high sequence. So you can label this any way you want. You can label this A, B, C, or you can label this 1 here, and this is 2. But bottom line is, when you see a high sequence like this, you could potentially at least go to the 100%, which is this 4068. So why are we looking at the Euro stocks? Because the Euro stocks is telling us that it is not going to be correcting the March low, because we're just talking about the Dow before, and we're saying that okay, there is a possibility this could be completed, and then we could be correcting the whole entire rally from March. But the Euro stock saying it's not really as likely as the Dow to correct again the March, the entire rally from March, because this is your correction right here. That's your correction to the cycle from March, and since then it has already broken above previous high, so it has started a new cycle from the lows, right? So Euro Stoxx is telling us that any pullback should technically be supported against October 29 low. This is an important low, unless it is doing a flat like this, unless it is doing a flat, expanded flat, but we don't entertain a flat against a clear trend, which is the upside, right? So unless it is doing a flat, then any kind of pullback should be holding above October 29. So what that means then is this pullback, this 4 with 4 here, this is also the same October, around around early November, late October. So that's why this view is what we are using instead of trying to forecast any other way. Alright, so at EWF we do not just use Elliott Wave, because as you can see, if just using Elliott Wave, we can always come up with alternate counts, and how do we try to rank which one is more likely than the others. So that's how we use correlation, and among other things, correlation is just another tool we use to figure out what is the more likely count. Doesn't mean it's 100%, but we can somehow explain, at least we are able to explain to the viewers or to the members, and then they can let their they can make their own decision right after they listen to the argument or to the logic. All right, so that's what we're looking here in the Dow. And as always, you can check our service. We have 14 days free trial, and the link is provided in the description of the video below. So see you all again next week. Have a good weekend, everyone.